Welcome back to the channel Trading Simplified. I'm a trading enthusiast and love to simplify trading. To get started, just a reminder that I'm not a financial advisor and this video is for entertainment purposes only. Alright, so welcome back to the channel. Today was a big day when I just look at the overall SPY just to get an indicator whether the market is reversing or not. This is looking at, I'm going to bring up the 1 month chart just so you can see where we had a lot of red over the last month. We were at a high of like 450s, went all the way down as low as 430s, and now this is the EMA line, which is a good EMA line to use to see if the market is reversing its trend. So right now the S&P is technically above, right? 438, it's above the CMA line, but it has to hold. So if it breaks this trend like it was, it will continue to come down. But with the news today and everything that's going on with the bill and all that, and they deferred, till December with the, the debt crisis, that is what made it so bullish. But, I'm still skeptical. I always just hold my long-term positions, my S&P 500, my Nasdaq, and, that's what I'm going with. But, when I'm swing trading, day trading positions, I'm a little more cautious right now because I feel like there's still a little bit more red to be had just because we had such a big green day, but maybe we might get a nice sell-off and get some opportunities to get in on some of these positions. But you just got to be careful because we're not completely out of the red yet. We need this EMA line to get past and hold. Once it holds this, it's going to start trending back up. And I mean, if you look 6 months ago, the SPY was as high as 452. That'd be nice to get back up there. But we'll see. We'll see. Some of the stocks that I've been really keeping a close eye on is on PLTR. PLTR really is, this is, if you look at the last, this is 6 months, so it's too far out. But if you look at the 1 month, it's been very bearish. It was this high, it has this big resistance level, 29. The next time that it makes it back up to 29, the stock is going to go to like 35, 37. But the thing is, it has to get back up there. It had a massive sell-off over the last couple of days, and I don't know if it was just because of the news and everything that's been going on, or people just don't believe in the longevity of it. Or maybe the institutions are just buying it up. But my whole point of bringing this stock up is that when I look at them at the 6 month chart, they had that low of $17, rose back up to 25, came back down to $20. And that is truly their support level. So like when you look at them, let me see if I can technical analysis. I think we can draw a pattern or something, or it's harder on the Fidelity is not as smooth as the WEBULL. WEBULL really does a better job where you can draw support level so much quicker. Look how slow this is. Here we go. All right. So anyways, so I was saying before, I made a video on PLTR and I was talking about how 21.5 to 22 really is the support level. If it breaks this level, it's going to trend down. It's going to come down to like $17, $18. So I'm going to be taking a position in PLTR tomorrow. I want to see if it's going to pull back a little bit. But, when you're making lower highs and lower lows, you just have to be really careful because it's on a downtrend, right? So it's making lower lows and lower highs. Now it looks like it appears that over the last 10 days, it's really been actually holding. And it's been holding this line. I'm using this reference up here. So you can see that it's been holding the 23 range. If it can hold a $23, I'm going to start a position and hold on to PLTR and actually try to swing trade them up to like $28 because if it can continue to make newer highs and higher lows, meaning that if it goes up to $24 tomorrow and then it sells off but it doesn't break the $23 range, and then the next day it goes up to $24.20, $24.50, and it comes back down to $23.75, and that's what I mean by higher highs and lower lows, or lower highs. I'm saying it the wrong way, but you get what I'm saying. So PLTR is something I'm going to be definitely taking a position. I'll start with 100 shares just to feel them out, but I want to see if I can get them a little bit cheaper. I was going to buy them overnight tonight, and then I said, you know what, don't give it to the FOMO. The green came back just for 1 day. Let's see where it goes. Next stock that I've been looking at, NEO is definitely becoming a buy. If this can hold past the EMA line here, past 36, this is going to become an entry. And then I already spoke about BABA in a previous video, so you can definitely refer to that. I just made that one actually tonight. And then I just wanted to bring up JetBlue. JetBlue is the only company today that wasn't doing well in the green. And it's odd because every stock was going green today. But don't be fooled. JetBlue is on the uptrend because the EMA line is right here and it is right at the EMA line. So I believe this is actually going to be a bounce point and we're going to see JetBlue go back to $16 tomorrow. JetBlue is a stock I always love day trading and it is trading above the EMA line right now. So to me, JetBlue right now is a buy. I'm probably going to be looking to get some shares in them tomorrow. And if they go anywhere around the 1530s, that's it. I'm going to pull the trigger and try to buy them. I mean, they've been sitting at the 14s. Look how many times they get to $14 and they bounce back up every single time. So JetBlue is a stock that has really sold off. And I think it's a good swing trade potentially. And look, it's trading above the EMA. And this is why you are seeing JetBlue keep getting these pops. Because as long as it holds this EMA line, the 200 simple moving average, it is going to keep going back up. The minute that it's below it, look, it's below it, it just kept selling off. But this purple line, anytime it's hovering above, we're getting nice pops. So I'm going to look to make an entry on JetBlue tomorrow as well. Another stock I wanted to bring up that I'm like kicking myself for, but you can't like, predict the future. Freaking CEI. CEI was, I don't know why I did that. CEI was, $5, went down to like 90 cents. And I didn't pull the trigger, and it's very uncharacteristic of me because the stock went down like 80% literally in 2 days. And look at that pop, 90 cents up to $1.78. I mean, those are gains that you can make so much money off of that if you just have the right amount of shares. So, and you don't even need that much, investment because it's $1. I mean, you could put a $5,000 position in this, and you could have made, 90 cents up to 178, that would be 5,000. So, and that would only been like a $7,000 investment. So, I mean, compared to the stocks that I usually buy that are much more expensive. The only reason I was thinking that is because it's a massive sell-off, and then now it's been coming back up. So, CEI, I'm not going to buy. I'm going to wait. I mean, I can't buy it after just watching that. I have the FOMO feeling where you just want to buy because it's going back up. It's got to be careful. If we find entry tomorrow, we'll try to get an entry. But, yeah, that was definitely a good opportunity, whoever took advantage of CEI. I just want to go over some of the stocks that I like to buy for the long term. SCHD, this is the Charles, look, it's got it right here, it's nice. It's the Schwab US Dividend Equity ETF. I buy this company long term. Whenever I make gains day trading in my IRA, if it's not in my taxable account, I will always just buy these guys and I just hold on to them. So this is one guy I always hold on to. I don't ever let go. Another index fund that I like to buy is 1Q. This is the Nasdaq Etf. I buy them as well. They're very volatile, but they are definitely. I buy them anytime I have new lows. So when they're at that $50 to $5 a few days ago, I bought a couple thousand worth. So I bought them around I think it was $55.50. I bought them like 2,000-3,000 worth, and I'm just gonna hold them long term. I just try to buy these guys when they die, because look at these gains you get. It's nice, like 2 points already, which is sweet. And then something that I just learned today is the triple. Well, actually, this is the SQQ. I think, yeah, this is actually if the Nasdaq goes down. Let me go to this one. This is the triple Q. This is something a new index fund that I'm looking into. It is dangerous because it's triple leverage, which means that it decays over time, the value of it. But if the Nasdaq goes down 1%, this goes down 3%. If the Nasdaq goes up 1%, this goes up 3%. So it's very volatile. So you can get major gains or major losses real quick. So I didn't know about this index fund, and this is something that I would have been looking at when we had that massive sell-off, because look at this return you would have had 5 days ago. 118 all the way up to 129. I mean, it's a 10-point swing. I mean, that's huge. So this is something that I'll definitely be looking at. This just tracks the 100 of the NASDAQ companies, and it's very volatile, and you can easily lose your money. So this is not something that you want to put like a huge part of your portfolio in, maybe 5-10%. But you can definitely get some good returns if you can get the bottom and just swing trade it. I'm not saying you got to get 10-point swings, but I mean, it seems like 5-point swings are definitely doable just looking at this chart. But this is 5 days, and look how much it's moving. In 5 days, it drops like 8 points, then goes up 10 points. Then going up on a month on this. This is like you can get smoked on this thing if you don't do it the right way. So just something you got to be really careful. But if the market continues to be bullish, I'm going to be making an entry on them. I just want to see, because today was such a big day where it just rose up literally, 5-6 points. So just something to think about. Uber's another company that like I look at and I'm like, I always tell myself, why aren't I buying Uber? It just seems it's so convenient. It's just a company that I understand how it actually works, and I always feel like you should own companies that you understand. But I'm not going to buy them at 47. I was looking at them at 39. I didn't pull the trigger, and look at that, boom, up almost 10 points. So sometimes you just gotta. Your mind is telling you to go into these things. You should just actually buy them. You have Nmdm, which is another microchip company. This company has been stagnant over the last 6 months, and by stagnant I mean selling off. But look, it is at its low again at 591. It's down here, 560s, testing new lows. So it's definitely something to look into. It used to be at high $17. This is a company that could potentially, if it can get past its EMA line again, which is the 580, if it can hold that, we're actually looking at potentially making an entry on them. And I like to see that we have the reversing candle first. We want to make sure that the candles are going to stay above this EMA line. Once they stay above this EMA line, then we can go to the moon. Because if you look at the purple, look, it's way above it. It just keeps going up. But the minute that it goes under this EMA line, it just keeps going down and down and down. So we have potential to enter Nmdm. This could have some potential. So just something to think about, another stock to be looking at.